Hello everyone and welcome back. Well, it's not often that we say there's big news around the corner, but yes, there is. Unfortunately, we have three central banks coming out in the next 24 hours with the ECB, the BOE, and of course the Fed coming out with announcements. But on top of that, there's even more. The final GDP number for the US and also the OPEC all-day meeting. So, of course, possibly be wary of oil trades over the next 24 hours. In recent movements, though, in the markets chose to really give up some of the big rally that we've had so far. They moved down after spiking higher in the morning and went all the way back to where we have one of our most important gap zones. Funnily enough, it's going to be sitting around this area ahead of the big news, especially the speeches from the central bankers. So if the market decides to boom, where's the next stop? Most likely somewhere around this 4,000 for the S&P 500. Funnily enough, a lot of options sitting there this week, which we will discuss in today's video. But there's so much more under the hood of these markets, including rotation and many other big macro figures that we need to be looking at. So join us as we go through all of that right now. See you soon. This will be a good one. Well, welcome back everybody to the Daily Show where we talk about stocks, commodities, and cryptos. If you like any of those markets, please remember to subscribe and of course smash that like button if you find value in today's video. Let's talk about the big tech inflow. No surprises to anyone that's been following the channel. We've been following this rotation now for 2 weeks, but it's showing up in the charts. And what this really means is basically Wall Street has decided that tech is cheaper in comparison to some of the other sectors in the market. Of course, 2022 so far has been driven by things like oil, commodities, inflation, all of those stories, but they've took a bit of a hit in the last couple of weeks while we've seen massive inflows into some of the big tech companies. And I think that really is due to some of the things that we're seeing, such as forward PE ratios getting a little bit cheaper. If you have a look at this chart over time, you'll notice that the forward PE ratio, and that doesn't necessarily mean it's cheap, by the way, is sitting underneath 16. Now, if we go back through history, this is kind of like, you would say like a middling zone for buying technology stocks or in general buying stocks in the market. Because this is a bit of a zone, basically people are starting to pick it up, and that means that larger funds are starting to move a little bit into this, saying, you know what, the risk reward is starting to look a little bit better. Would they prefer, of course, a 14 or even a 12? Of course. But that being said, they have to put money to work at some point, and we saw that in the quarter rebalancing as well. So yes, back down to 16 here for forward PE projections. Some worrying things now in the economy. What are we starting to see happen? Well, no surprises. Yes, we know that there's been a strong jobs market in the US, but that's starting to weaken, and it's showing here with tech layoffs that I did tweet today on our @FX Evolution on Twitter handle. You can see here the big tech layoffs that are starting to occur. High profile ones that we've seen recently have been things like Coinbase and Tesla, but they are starting to mount, and it's not just one company in tech that is firing staff. It is many, and expect this to continue to rise as we go through the rest of 2022. And it shows that that number, of course, which is a lagging number, the jobs number, may be starting to look a little bit dodgy in the next couple of months as we see it release. Year-to-date averages of investors and retail traders actually investing in. This is a S&P 500 chart over the top of retail daily net inflows. And what you'll notice is that retail often do get it wrong. Recently, they've been buying pretty strongly, and it's actually picked up relatively okay. But yeah, look at this. A big spike over here, huge amounts of retail investment. What happened straight after that? Well, down we go. And I think that was around an FOMC meeting, and of course it traps a lot of people. It just shows you that if you could see this data real time, which we'll be trying to bring some more of that to the channel over the next coming months, so definitely subscribe for it. It gives you a big edge to know what retail is doing, because the street technically likes to do the exact opposite. Another thing that's really interesting is ETFs versus single stocks. Now, I did a bit of a poll about this on the channel, and we found that most of you have pulled in your individual stock purchases and trades, and you're starting to move more towards the S&P 500, Nasdaq, Russell, all of those types of things, currencies and metals. Well, that's actually a pretty good decision, but it looks like a lot of people have done that since October 2020, where we saw that really huge spike in single stock picks and those types of things. We've seen that really compress, and now more people are comfortable with things like the S&P 500, Nasdaq, and others, which definitely makes sense in these types of times. On the more positive bit of news, and I think this needs to be followed, we've got two big bits of news. The first one is China actually started to lower its restrictions on COVID. Now, as we know, that's a big supply problem. The one thing they did there was, it's not a big one, but they changed it from 3 weeks isolation to 10 days. In the future, if we continue to see them rolling back some of the COVID policies, that's going to be a bit of a bull sign for the market. So this isn't enough yet, but do watch that story. I check it daily, and I will bring it to you on the channel if we see it turn around. It's going to be a very big story if that occurs, and expect the market to like it quite a lot. I think supply is the biggest issue we're facing in these markets. Speaking of supply, container freight rates are coming down steadily, really showing us that we've probably seen the peak in some of the inflation in the markets. And this is why we might expect US 2-year and 10-year to turn around as well in terms of interest rates. And we'll talk about that very, very soon. Now let's look at the last 24 hours in the market. This is from the market close 28th of June, 2022. And you'll see it was tech that was actually getting rotated out of on this particular day. And this is because while all of those numbers show rotation into tech, we saw it, 2 weeks ago? We saw the comparative bit. We saw the bullish movement. Now, all of a sudden, it was time for them to reduce that position as they await the big news coming out of course, the Fed's mouth, the ECB, and the BOE. Nasdaq was down 3%. The rest were down around 2%. And they rallied slightly in the morning and then fell all the way through the session. This meant that things like technology, clean energy, XLY, which is consumer discretionary, were the worst performers. And the only good performer for the day ended up being oil and utilities just behind that. Another defensive day here with most of the defensive plays such as XLP, consumer staples, and others holding up better. Another thing that we've seen recently has been the VIX and what's been going on with the VIX. Now, if the VIX has been really high, or the fear index has been really high, we've tended to see that being a bottoming effect. I've said for a while around 35 VIX has been very, very solid this year, and we've been following that here on the channel. But here's a great chart that I think can help a lot of people just to understand that when fear rises up to a very high level, often that can be the point where we're seeing bottoming, and you start to look for bottoming bases on your charts. And of course, we do that together here on the channel all the time. Speaking of VIX, where are we? 28.36. So no, not a 35, and certainly not a 25, but it did spike due to the decline in the markets. In the middle of nowhere at this point, nothing much we can get from that bit of information. In terms of 2-year versus 10-year, these are the interest rates, the treasury yields moving forward. We saw the 2-year spike up a little bit and then slightly decline after hours. You'll notice it's moving down a little bit as we speak at the time of this recording. But if it doesn't come back down fairly quickly, it's not going to look too good for the market. Remember, the market is very sensitive to this. As we saw 2-year rates go up, what happens to the market? It goes down. 2-year rates go up, what happens to the market? It suffers. So we do want to notice and definitely pay attention to this very important factor in the markets. Basically, if the 2-year ends up going up more and the market's holding, that might be quite false. And at this point, we will be paying attention to that. We'll bring in the PCC as well. This is the put call ratios sitting at around 1. We're not at an extreme level either side, so we can't get too much information from that, but we did have some requests of people to look at it. At the moment, PCC sitting right in the middle. Let's now talk about the US dollar. Were we seeing people move into the US dollar? The answer was yes. It actually broke this little downtrend here that I did cover in the private stream yesterday. If you're ever interested in that, you can check out the free 7-day free trial down below. But basically, it broke this and it started moving up. It is technically still in the downtrend on the small time frames like the 1 hour and a few others, though. Yeah, it's not really clear. And I think that if you're a US dollar trader, it's kind of at a point where you would expect it still to sell off here. It hasn't made new peaks over these last kind of ones that are sitting here, here, and here, but it's not clear. And I think that's because of the news. I would wait the news, that is the Fed, the ECB, and of course the BOE, And once that comes out, we should get a clearer picture from that. Similarly, gold is struggling around the same zone that we've discussed recently. It's basically just holding as best it can around the 1820. It is holding against the US dollar, which is, of course, this is gold versus the US dollar, but it's not really doing that well. And for it to really start to play the game, one of the big things it needs to do now is breach this level here. 1830 in the next 24 hours, something like this, and then it breaches through. A little bit of a pullback after that should be a pretty nice long from a technical perspective. And that's the type of thing that I'm looking at. Remember, everyone on this channel, we always read it out. Patience, react, don't predict. Sometimes you don't have an edge in market. Sometimes you do. It's your job as a trader or an investor to find your edge, to find when you have the greatest statistical likelihood of success, and then move from that. Why would this be a big trade? Because it would be breaching through a supply zone. On top of that, you can see these wicks here, big rejection. So if you breach that, what are you doing? Probably putting the squeeze on some orders sitting behind it. A very important concept, and something that I always take with me every single day into any trade or any concept out there in investment. Tesla was pretty weak in the session. It didn't continue on the way we thought it may. Never made the new high. Unfortunately, we couldn't breach and move into this level here. The thing with picking individual stocks right now, which is what we brought up at the beginning, is that it's quite difficult. And why is it difficult? Because when we're in a high VIX environment, it's really more about the US 500, the S&P, the Nasdaq, the IWM, the Russell, all of these things. Picking individual stocks is just more, if you see the S&P 500 breaking out to the upside, you know where its next stop is. Guess what? You come in, you pick Tesla, or you pick another stock. Those stocks will often do better percentages, but really they have to be driven by the main index actually breaking out. That's not what we saw in the previous session. That's why this is going to look very similar to another one that we'll check out soon. If you're wondering where's the support here for something like Tesla, well, it's most likely down and around this area here, about the 690, and that would be consistent with filling the gap on the S&P 500 and then hopefully looking towards that recovery kind of play to get us back to the 780, which is a huge resistance, and we'll talk about that should it happen. XLYXLP confirms our suspicions of the last 24 hours, which was that we are seeing a little bit of tech sell-off. Go back, watch our previous videos on this. This is a great indicator for showing us risk on or risk off. And if you actually zoom it out on the markets, you'll notice it's been risk off all year, only with a small risk on sometimes for the technology stocks. And this is how we're determining that the rotation is occurring as it's happening rather than after the fact. Russell 2000 still has left two gaps. Now, depending on how this whole speech stuff works out, we might be able to actually get a bit of a rally here. But look, with the Russell, we've got the long leg doji, we've got a sell-off, obviously not really living up to expectations. I would expect, however, if the market does start to go bullish, it's possible the Russell will outperform both the Nasdaq and the S&P 500 in its recovery. Let's move over to the German market here, the DAX, just have a quick look at it. Huge amounts of rejections here. Very bad looking chart, just frankly looks terrible. If it does get through though, and you are feeling bullish and you want to react, not predict, wouldn't this be a huge squeeze? I mean, we now have 3 supply style candles, 3 rejection wicks here. If you breach that, what are you doing? Again, you're putting the squeeze on, and that could be quite a strong trade at that point. But at the moment, I mean, it just looks mostly bearish here on the chart, in line with, of course, the declining market. Pretty important 24 hours here for this one. I'm going to be interested to check that out in the next 24 hours on the charts with all of you out there. So let's now take a look at the one that most of you like to trade, which is the Nasdaq. We had the downward trend line here. It hit that downward trend line, pretty much filled the gap here on the upside, though not quite. It didn't quite get there. And then it sold off to fill the one that it's left down below. So the Nasdaq was technically the best short signal that we got in the last kind of days, and we did have it here, but I like to use the S&P 500 as much as possible. It fell off pretty heavily. It's back down to now a support level, so around that 11,000 550, previous kind of nice holding pattern area for it. And this is where the news will most likely come out and where the movements in the markets need to change. We'll use the S&P 500 to really detail some of the key levels. So again, the downward trend, again, where that level hits is about 4,000. We did leave behind a huge gap here on the S&P 500 that was left from the Friday rally. And it makes sense to come and fill this. Now, generally speaking, this is one of those days that you look at and you think, what a good day to potentially be day trading. If you see reversals here in your systems, if you see strong pickups, it's in line with the current inverse head and shoulders. It's in line with the current concepts in the market, and even in line with some options that we'll take a look at the moment. So what do you think? This is an area that I think a lot of people will be watching, waiting, having the patience, and then trying to react to some kind of pickup off this zone. If it then breaches through here and ends up getting underneath 37.50 though, not going to be so good for the market here. We move then all the way down to the gap before the island. And whether we reverse off this point will be a question we have to ask ourselves in a later session. I doubt we get there that quickly. If the markets do end up going below any of these points though, the biggest, cleanest area to be looking at is going to be the 200 weekly SMA, and the 200 weekly SMA is going to sit smack bang on the 3500. We've done it plenty times on the channel, but basically it sits right on 3500 at this point, which just so happens to be the previous resistances on the way up through this market. So remember, at this stage, it's still theoretically bullish on the smaller time frames, such as the 1 hour. We still have the series of higher highs and higher lows. And until that's taken out, we can't be sure that the market doesn't want to actually bull through this area as it fills some of these gaps. So that's something that's definitely going to be on watch now for the next 24 hours. US 500 at the time of recording, you can see here, I've just marked up the gap. You can see where the market currently is. It's trying to do its best to hold through this area. And I just want to point out this little distribution that we saw. It turned out to be distribution, though it was like, just basically a coiling market. We had a market that made a peak, came through, made a slightly lower trough, and everything was looking kind of bullish into the session. It goes through and then instantly reverses. If you ever get triggered by these things, always ask yourself this question. If you get triggered and then automatically it just goes backwards, we've all had that, and it ends up breaching below, what it's done is it's trapped you. It's done a good job of trapping you into the trade. The best thing to actually do is to say, it got me. Well done, Mr. Sneaky Market. You've done well there. And then what you can do is you can actually look to the reversal, the most common area that it would be going to, which is here. It's trapped liquidity, it's grabbed the orders, and then of course it's reversed. And as it broke through this low, it was pretty obvious that it would go down to this gap range. So certainly a trade that could have been there, even if you got trapped. Oftentimes traders get scared and won't be able to pull the trigger the other way. It's something that you have to just take the emotion out of. And if you can do that, it's a big game changer. Let's talk about the market in the next 24 hours as well, and into the Friday options expiration. We now have quite a lot of 400 calls. So this is for the SPY moving up. And that's kind of like a big resistance for the end of the week. Calls sitting at 400, calls sitting at 390. And then of course, we've got some puts sitting at the 380 area and the 370 area. So they're starting to kind of show their head in terms of where the market options are. 385 is currently max pain, which is of course above where the market's currently trading at this stage. So we'll have to figure out whether that's going to hold, but certainly something to be looking at. Onto crypto, Bitcoin still sitting around 20,300. It's still right on electricity production cost. Bitcoin has not been moving very strongly in the subsequent sessions. It hasn't really even moved up with risk on in things like technology, and it's not doing that well. At this point, you can kind of say crypto could be slowing and effectively you're waiting for the next level. I like to set long-term alerts on key levels, such as maybe 23,500 or 24,000 on Bitcoin, and then come back to it when those things happen, because we could be in this holding pattern for a little while on Bitcoin. We will keep covering it, but we could certainly be there. Ethereum versus Bitcoin, if you notice here, we have the coiling above. Ethereum was outperforming Bitcoin in the recovery. It's now kind of slowed, and you'll notice here with Bitcoin, it's just basically on the little bit of support that we put in the previous session. So similar to the stock market, it's come back to a little bit of an area. It's previously been bought off this a few times. Will it again? well, that's up to, of course, your systems, and hopefully you can find the key things that are happening underneath. Thanks so much for watching today, guys. Do remember that you can follow us at FX Evolution on Twitter. And also remember, we have OPEC meetings today, final GDP numbers, ECB, BOE, and the Fed coming out 9 a.m. Wednesday, June 29th. And for the rest of the week, we've got core PCI price market index as well. And really, that's the big bits of news that are coming out. It's going to be a bit of a blockbuster Wednesday. Let's find out whether we can get some volatility and direction. I'm sure Jerome will mention the tools at least 100 times in his speech. And maybe, who knows, that might even bring up the markets. If you enjoyed today's video, please subscribe, smash that like button. We'll see you in the next one. Bye for now.